And welcome to all of our listeners and viewers around the country and around the world. It has been a tough 7 days for the U.S. economy. On Friday, the FDIC seized control of the failed California-based bank, IndyMac Bank. It was the second largest bank failure in U.S. history. Analysts project another 150 banks could collapse. On Sunday, Treasury Secretary Henry Paulson announced extraordinary moves to bail out the mortgage giants Freddie Mac and Fannie Mae, which hold nearly half of the nation's mortgages. On Monday, stock in General Motors fell to a 54-year low. And on Tuesday, the Dow Jones Industrial Average dipped below 11,000 for the first time since 2006. And the dollar hit a record low against the euro. And yesterday, it was announced that inflation is now rising at its fastest pace in 26 years. It was also revealed the FBI is investigating nearly 24 banks, including IndyMac, for mortgage fraud.
Economist and investor George Soros warned Monday the current financial market turmoil represents the most serious financial crisis of our lifetime. Meanwhile, President Bush has attempted to put a positive spin on the state of the economy.
I think the system basically is sound. I truly do. And I understand there's a lot of nervousness. But the economy's growing. Productivity's high. Trade's up. People are working. It's not as good as we'd like. But, and to the extent that we find weakness, we'll move. That's one thing about this administration. We're not afraid of making tough decisions.
To talk more about the economy, we're joined by two guests. Danny Schechter is executive editor of MediaChannel.org. He's a documentary filmmaker and author. His latest film is called In Debt We Trust. He's author of the forthcoming book Plunder, investigating our economic calamity and the subprime scandal. Max Fraud-Wolf is economist and writer. He's an instructor at the graduate program in international affairs, New School University. He's a frequent contributor to the Huffington Post, to the Asia Times, and the Independent. And we welcome you both to Democracy Now! What's happening in the economy? Danny Schechter, let's begin with you.
Well, when I came on your show, when the first subprime crisis manifested itself in August 2007, I said I think we're going to be in for much worse. I was right on that, unfortunately. I said that this is not just a market correction, but a criminal matter, and I called subprime subcrime. The FBI seems to agree with me now, and they have 1,200 investigations underway, including an investigation into Bear Stearns and to what happened there, IndyMac and other banks. So I think when the dust shifts, finally we're going to find out that this is a criminal action cabal, really, by people in the market who are out driven by greed to make as much money as they can. The victims of all this can be seen in the mounting foreclosures that are sweeping the nation. Yesterday, the Associated Press reported a fear of Nile fever in California, West Nile, coming back because of all the swimming pools that have been abandoned, have become infested with mosquitoes. And this has already caused cases of West Nile fever in California and in Florida. There's fear even of malaria. So there's the consequences of this crisis are just being felt by many, many people, and it's not pretty.
But, Danny, in terms of what the role of the regulating agencies were in this whole situation, because obviously whether it's the SEC or whether it's the Federal Deposit Insurance Corporation or the Federal Reserve, they all had a role in terms of what they were doing to prevent this kind of collapse.
I think the more operative phrase, Juan, is what they were not doing, okay? Because the regulators were asleep at the switch for the most part. They were not doing their job, even with the regulations that existed. These were, in many cases, so-called exotic new instruments, derivative products and the like, which maybe they weren't set up to monitor, but they didn't make the effort. Also at fault here is our great media system, which failed to investigate this when it was happening and something might have been done. And that's what I talk about in Plunder, this relationship between this credit and debt complex that really dominates our economy, a regulating body and bodies that are not regulating, and a media that's looking the other way.
Max Fraud-Wolf, explain what Freddie Mac and Fannie Mae are and what this bailout means for them.
Okay, what they are historically an American dream machine set up in the 30s and then later to help low and middle income people get housing. How do they do that? They buy the loans that banks have already made to relieve banks from the risk of owning those loans and to allow banks to loan more money to buy more houses to low and middle income people. They really are kind of the American dream machine. And looking at them in the situation that they're in right now, and they kind of became the American nightmare machine in the boom of the 90s and later, looking at them now is a real sort of metric. It's a near terminal fever in the American dream machine. Their sickness is a sickness of opportunity for low and middle income people to move into houses. So they're an elaborate federally subsidized system that allows low and moderate income people to get home mortgages, to get houses, in order for us to build more houses and have more people become homeowners, particularly lower down the income ladder. Until very recently, they were not allowed to be involved in mortgages worth more than $430,000. So, you know, not the most fancy houses. It's not Palm Beach mansions and such. And even now, with their new increased ability to loan higher sums, it's still only about $730,000. So it excludes the very wealthy who presumably don't need help. They grew too big, they were privatized in the 70s and 80s, and they're victims of a crisis in this country where people borrowed much more than they can pay back, and in a small number of cases that they're willing to pay back. And they now have somewhere on the order of $5.078 trillion worth of mortgage risk exposure, and they have $80 billion worth of capital. And basically, more than their immediate sicknesses, which are real, and their losses, which are real, there's been a loss of confidence in them and in the system and in the mortgages that they've written and that they've backed. And the reason this matters writ large is because our housing markets are already sliding, and if anything happens to make them less robust, less able to buy and back mortgages, you can go ahead and expect maybe another 5 to 15% decline in the average house price. And there again, it's the death of the middle class and the death of the American dream, because if your house is your major asset, it's already slid 15, 20%, and the structures that help support it, particularly low and moderate income homes, are weakened, you can expect further pain, further damage, and further trouble. So, I mean,
but Max, I just want to ask Max about Fannie Mae and Freddie Mac. Weren't they presumably, they were to some degree immune from the subprime crisis because they were not, the kinds of loans that they bought usually required at least a minimal down payment and good credit, so that supposedly they were not supposed to get caught up in the subprime crisis.
Absolutely correct. I mean, in fact, it is subprime because it's non-conforming. That's what the industry calls it. And by non-conforming, it means it doesn't conform to the standards for Freddie and Fannie. So, yeah, they didn't directly intervene, but the funny thing happened. They weren't directly making subprime loans. Private firms were. But because their mandate is to assist homeownership in low and moderate income communities and Americans, they actually ended up buying bundles of subprime loans. They were rated AAA by the S&P, Fitch, and Moody's, but they ended up buying some of those loan bundles, and that's where they took their initial losses and some of their big losses.
They were propping up this whole subprime system. Let's face it. And now the government wants to bail them out. The Bush administration, big free marketeers, want to now nationalize, in essence, even further, Fannie Mae and Freddie Mac, if they are in danger. And this means potentially billions of dollars in taxpayer money, and also increasing potentially the national debt by $5 trillion if everything collapses. That's why homeowners, organizations like NACA, are taking a different position. They're saying we need to restructure current loans. We need to get bankers to recognize that unless they make loans affordable to low and middle income people, these people are going to be facing foreclosure with the ripple effects that foreclosures cause. And this weekend in Washington, NACA is bringing thousands of homeowners to try to restructure their loans and negotiate on it. And if the banks don't go along, they're going to Congress to demand congressmen call the bankers to try to negotiate fair settlements for people at risk. And this is a different kind of intervention. It's not just protest. It's serving this constituency of people who have been victimized by the crisis, and also confronting Congress, not for a bailout, but for action.
We're going to go to break. When we come back, we're also going to talk about IndyMac. What does it mean? The lines outside the bank for people to get their money, reminding us of 1929 Wall Street. We're talking with Danny Schechter, executive editor of MediaChannel.org. His new book that is just coming out is called Plunder. We're also joined by Max Fraud-Wolf, economist and writer, an instructor at New School University. Stay with us.
What started as manipulations and maneuvers on Wall Street has now moved to Main Street.
The cascading impact of the subprime mess is clear. No mortgage relief plan can undo the loose practices